Trump's tariff tsunami, and it can be called that against the broader market sell-off that we've seen come in because of the tariffs, is making waves across global markets. Top voices weigh in. Sandeep Tandon warns of inflation's comeback and a Nasdaq that's yet to bottom out. N. Jayakumar, in fact, sees demand destruction ahead. While you do also have Taimur Beg, who also sounds the alarm as far as stagflation is concerned. Let's go across and listen in to what the experts had to say.
US market has still not bottomed out, and particularly Nasdaq has not bottomed. So anything related to technology basket or the which is sentiment linked with the US market should be over. 3 years, 5 years perspective, then trajectory for dollar index is clearly down. I think dollar index either has already peaked out or has potential to peak out in 2025 itself. But if I have to look at from a very near-term perspective, despite that DXY has corrected yesterday, I still believe DXY and global yields, what we have to watch very closely. It has potential to spike from the current level because when nobody expects that, and that's the time reversal happens.
To the extent that specific sectors have been exempted, it clearly shows the shortages that exist in those products, in those sectors. Whether it's pharmaceuticals or minerals or any of these, the US is in serious short supply. And there could be a lot more damaging impact it could have done had tariffs been imposed on these. At the very least, it could have been disrupted, already is, by the way, for the average US consumer. I think India will be a big beneficiary of money coming back into these markets. And in that, the sectors like pharmaceuticals and to that extent, even IT services will actually stand out.
Probably see, starting with the US, inflation tick up. Already there are signs of producers looking at input and output prices and saying that their input prices are rising and therefore they'll have to push on some prices. Already we're beginning to see some degree of tightness around the immigration measures pushing up home construction prices. Assuming the Fed can do what the Fed wants to do, not what Trump wants them to do, then the Fed is going to be very likely to remain on the sideline, but perhaps start doing significant tapering of quantitative tightening, because in times like this, there is significant additional need for liquidity globally and, of course, in the US.
While these tariffs are a big sentiment dampener as far as the whole world is concerned, as far as India is concerned, I'm more worried about the result season and the consequent earnings estimate downgrade that most of the sectors are likely to suffer. You will see bilateral and multilateral trade agreements within the Asian bloc, maybe, the India-China trade agreements, which have, kind of long been postponed, long been on a back burner. They would actually, possibly improve.
It's pretty universal, the views that this is going to be pretty bad news for that US growth story. As I say, consumer spending is going to be under downward pressure, and businesses are going to be facing a very uncertain economic environment. Are they going to be putting money to work immediately? Maybe not. So there is this sense that stagflationary risks are on the rise. So it's not just the tariffs that India and other countries have to contend with. They've also got to acknowledge that the growth cycle may be changing quite rapidly in America as well.
This economy is not going to do as well as we thought a month ago, and that's the Fed saying that. That's also a consensus saying that. So the U.S. economy is going to suffer. We're not going to have as much growth, and we're certainly going to have higher rates of inflation in response to rates of inflation moving a little bit higher over the next, say, 7 or 8 months.
Slowdown that we are likely to see in the US. I also don't anticipate a full-scale recession, negative GDP growth, but I can see, as we move into the second half of the year, lower GDP growth and a slight uptick in inflation. That is not really, I think, a good news for emerging markets.
Those are the reactions coming in from global experts when it comes to Trump's tariffs that were imposed yesterday.